It's 2 minutes after 12, and welcome everyone to Sikich's Finish Strong 2022 Year-End Payroll webinar.
Yes, welcome.
And we have a lot of material to cover today, and hopefully we can get through all of that and give you all the opportunity to ask questions. We'll definitely have a couple of polls, questions, and the surveys to keep you engaged in the whole process. And I think, since it's 3 minutes after time, we'll go ahead and start. And absolutely, we'll have the presentation and a couple of other things, for you to download from the webinar itself, just in case if anybody has missed or you want to share with your colleagues at work. So anyway, welcome. All right. My name is Neil Verma, and I'm with Sikich LLP. I've been with Sikich for about 6 months at this point. But my background is over about 25 years in HCM and payroll organizations, running the operations, managing implementations, conversions, optimizations. Worked on various different technologies, Workday, SAP, Oracles, and few others to name. And I'm glad to host this webinar today for all my payroll professional friends to help you and to engage ourselves into that how we can make our year-end processes better going forward. We'll try to cover as much as information that we have, that how to plan for your year-end, and eventually we will get to what has happened after post-pandemic and the COVID care and the CARES 19 Act. But anyway, like I said, my name is Neil Verma, and welcome to the webinar. And I also have my partner in crime, Rachel, who will be helping us and assisting us with her expertise also. So Rachel, would you please introduce yourself?
Sure. My name is Rachel Saunders. Similar to Neil, I am fairly new to Sikich, but definitely not new to the industry. I have almost 30 years of Fortune 50 conversions, implementations, M&A activity, lots of projects with global payroll, and very, very excited to be able to share that with a broader audience as it's applicable to you guys, right? To share some experience that might be helpful. And happy to be here. Thanks all for joining.
Thank you, Rachel. All right. First and foremost, I'm not going to spend a lot of time on this one. Just a disclaimer that Sikich, we have done our best to present you with a lot of information, and we'd like to make sure that whatever information we provide at a time and a point, it might be right, but make sure that if you're following up on these things, to check your resources, that if the information has changed and all this stuff, so that we are all current on, as the things are changing pretty rapidly in the payroll technology and the process perspective. So we just want to make sure that you have what you need to do the job, to do the payroll year-end the right way. Okay. About Sikich. Sikich is a global company specializing in technology-enabled professional services. So what does that mean? At the end of the day, Sikich is about 1,400 employees, and we are one of the largest CPA firm, believe it or not, in the United States. Okay. We can not only help the organization from a tax planning and tax resources, we also specialize in HCM and payroll advisory across the globe. Our technology arm, we offer ERPs and CRM services. And Rachel and I, we work under the human capital and payroll advisory unit, whereas we provide, based on this, the information that you have from HCM perspective, we can provide implementation services, we can provide interim payroll management, and we also provide the payroll optimization and standardizations, advice, and the process, and we can do the assessment based upon the situation that you might be in. So that's what Sikich is all about at the end of the day.
And probably wouldn't hurt to clarify the association that people might have with Executive Alliance.
Right. Sikich acquired Executive Alliance a while back, which was a predominantly HCM and payroll advisory organization. So that's how Sikich kind of rolls itself into this space. Okay. So from an agenda perspective, what are we going to cover today? We're going to obviously cover the do's and the don'ts for guests of the payroll year end. There's a lot of information, a lot of processes, a lot of things changed during the year end process. We'll cover that. We will also cover a payroll year-end checklist. So that's a very comprehensive checklist. It may, or all of the things may or may not apply to your organization, but it certainly gives you the idea of the tasks and the things that they need to get done during the year-end process. And don't worry, you won't have to remember the screens or take a shot of it. We will actually, in the download sections in the handouts, we will provide you that with a comprehensive checklist so you can use that in your organization. Okay. We'll also give you the minimum wage updates that's coming up in the 2023, all the changes. State unemployment wage change limit changes that is happening in the 2023. We'll also talk a little bit about technology consideration, whether in-house payroll or outsourced. And we'll also spend a lot of time on aftermath of COVID-19 with the CARES Act. Remember this, that when the pandemic started, the government and the IRS in the states created a lot of compliance, new rules, and new processes, and those were done in a very quick manner. And now that pandemic is kind of behind us, now the states and the IRS and the government is looking at to say the things that they did, how to make sure that they were followed and prompted to what the organization should have been doing, and that's opening up a lot of can of worms from an audit's perspective. So we'll talk about that, and at the end, if we have some time, we'll have the Q&A. But I would recommend you guys that if you have any questions regarding any topic that we talk about today, put it into the chat, and Rachel and I will try to address those as quickly or as much as we can. And if, like earlier I said, if we cannot address those during our presentation, then we'll send the answers and we'll provide the answers and our recommended answers to you via email, and we'll reach out to you. Okay. So to begin with, we have a short payroll poll question. So if you guys take 2 seconds, I would appreciate that. So Rachel. Rachel, are you good?
Yes.
Okay. Okay. I'm sure people are taking their time to answer these, but let's get this in quickly so we can.
Wow. So most of the folks, 71%, are processing in-house versus 29% outsourced. So this information will be very helpful for both groups, but for in-house payroll, it's even more critical that you're validating all of these checklist items.
Well, I'm really surprised at those 71% versus 29%. That's not a bad place to be in, I guess.
I'm happy to see it.
Yes. Okay. All right. I'm not sure why my screen keeps switching it back to the slides mode, but we'll fix that. Okay. All right. So let's talk about the things that we should be looking to do before and during the year-end process will begin. So Rachel, would you please walk us through these things?
Sure. So I'm going to try really hard to do a couple of things when I present today. One is to not read the slides to you, and the other is to keep it a little less dry, right? Because we're going to send you this deck, and so you will have the information. We won't need to recite, mounds of detail. We can give a little bit of a different perspective to these items. So, and the other thing I'll warn you about is that one thing I will also do today is repeat one word over and over and over, and it is communicate, communicate, communicate. It is so key to getting engagement and understanding and cooperation from the employees and from other teams. Okay, so to get started on the list, so we talk about forming the internal team. So these are your associated teams that have inputs to payroll, contributions, teams that are responsible for software updates, for benefits updates, for tax updates. So each of those teams needs to be involved in this process and be aware of what they own and their deadlines. When you create this project plan, it's easy to start with just an outline, and you can fill in that detail as you go through the project the first time or year over year. You can build out the detail, but start with something that gives you a roadmap to follow year after year and keep you on track. As far as the responsibilities, this is part of the communicate, right? Tell everyone to identify the person on their team who owns the item, and to ensure that their pieces are completed by their deadlines and that they understand what those pieces are. What are your expectations? What do you need them to ensure? And the last one on this slide is about external vendors. So if you have W-2 print files, deferred comp vendors that have updates, or stock and investment firm vendor updates, all of those things need to be in the system before you get through the bulk of this year-end work. Okay, Neil? So on the next slide, here's my favorite word: communicate, communicate, communicate. So on this calendar, we want to communicate all of the deadlines to the teams that are impacted. Maybe highlight any specific exceptions. For example, if you have a deadline that you can't avoid posting on a company holiday, you'll want to flag that and highlight it so people realize they have a deadline, so that you're not reacting after the fact. And the second piece, it refers to the acknowledgement of what each team lead and team has on the project plan. I would encourage a literal acknowledgement of this. Literally ask them to acknowledge, either in person in a meeting or by email, that they have reviewed and understand their ownership items. And my favorite word again, communicate, communicate, communicate. Communicate to every impacted team, employee. You've got IRS updates, W-2 distributions, 1099 form distributions. All of those things need to be clearly communicated to avoid confusion and frustration by your clients, your internal clients. And as far as testing the updates, those would be tax updates, W-2 configurations, contribution limits, form changes like the big W-4 form change we had a few years ago, and communicate to the other project leads to also test any of their data, benefits limits, or any other changes that are visible that they can test. Okay, Neil? Now to the don't forgets. So again, with the calendar and your other processes, don't forget your banking holidays. So you can review online the Federal Reserve holidays. Again, I would review the calendar very closely for correlation with company holidays. So the company might observe on a different day or multiple days. Also, you might have third-party vendors that have holidays on those dates in some circumstances where they have a limited response or availability. So be aware of that as you're making your schedule and communicate that to all the team members. Year-end cutover is, here's where I would recommend a blackout period, if possible, between the last payroll and the first payroll, where there are no other system changes other than payroll, or there are no other, you've blocked out where there are no payrolls, no more off cycles. Give yourself, I would recommend a week, wouldn't you say, Neil? If possible.
Absolutely, yeah.
Yeah, to work through those items where the system isn't moving, where you can analyze, review, and audit your data. And another reminder on the year-end changes, don't forget to validate the W-2 boxes. So this is any, box D changes to labels, or and also the retirement eligibility box. That's a big one. I recommend that you review a broad sample of that list, because it's very easy to miss a few that aren't eligible. So it's important to double check that. And lastly, don't forget to process all of the manual checks. So clear out everything, do your housekeeping, and communicate, communicate, communicate. That is my biggest recommendation.
Yeah, if I could add 2 cents to it, Rachel. If we all think, as a payroll professionals, if you think of payroll as an hourglass, right, the shape of hourglass, the top represents, where HR and the employees are sharing their data for payroll to run the payroll. Finance is sharing with the compliance of the taxation, and the other controls might be that finance has set up for payroll. Those are going into the top section. And then you have the IT who controls the systems and configurations. Those kind of all go up on top. And there's a very little narrow, kind of the middle point, where payroll acts upon all those things and takes it into consideration and runs the payroll and produces the paycheck. At the bottom part is, all the delivery of the reports that we do, compliance that we do, delivery of the paycheck. So that's what payroll is kind of, from Victoria's perspective, looks like. So we have a very short middle section and very little time to do all these things. When it comes to year end, it becomes even more complicated, because not only you're running normal payrolls, you're also trying to complete the year end process so the W-2s can go on time. So you have to manage these timelines, and you have to manage the data, and you have to set those expectations, your vendors, internal clients, to make sure you get the data where you need it or where you have to have it, and you get the data right. The accuracy is very, very important, because you don't want to be in the habit of issuing multiple W-2Cs to W-2Cs and all that stuff. So that's kind of my 2 cents into this whole process. Okay, all right. So we have a second question, payroll question number 2. So if you guys will take 30 seconds, 15, 20 seconds to answer that, that'll be really appreciated.
So this poll question asks if your organization has a formalized year-end payroll plan. So this would be somewhat like the project plans we were just referring to in the do's and don't forgets. So I'll be interested in seeing how this works out. But again, I think even an outline is a very good start, and it's something that can, you know, flush out year over year as you walk through the process. You can build that out. But I think it's very helpful to have an actual timeline and an actual document that folks can follow. So overwhelmingly 69% do have a formalized year-end plan. 19%
That's good
don't,
news. That's a
and
good
12
news.
are working on it.
That's a good news.
Yes.
Okay,
Hey, the
every time
nice
this,
thing is if your company doesn't have a plan and you start one and you start that outline and start building it out, you'll be the hero for putting together that plan that they can follow.
yep, okay. All right, so having said that, let's all get into the nitty-gritties of what the payroll year-end should look like. You know, so, Rachel, I can start off and then I can hand it over to you once my throat gets a little tired, if that's okay with you. Okay.
Okay.
So what we have done here now, this is going to look a little bit different than what you're actually going to get in the handouts. From a presentation perspective, versus where I'm actually giving you a working document that you can take and change and all this stuff. But most of the information that we are providing today in the payroll checklist is included in that handout that we have in the handout section. Okay, so we kind of split it into, you know, what the things you should be focusing on before the last payroll, and what things we should be focusing on after we have run the last payroll. Okay, and before you run the first payroll of the next year or the payroll adjustments run. So it's kind of very important that we follow these as you know, rules to make sure that we have the right W-2s, number one, and number two, we can you know, promise accuracy and timeliness of all the W-2s that they go out by January 31. Okay. Probably won't be spending a lot of time on these line items, but to kind of give you a view that, you know, verify the employer-employee data that is used in processing for quarterly tax reports and W-2s, which is it's a very big task, right? You're not only verifying and reconciling all the deductions and all the earnings that you have, we're also saying that we need to reconcile those to the W-2, so W-3s also go on, right? Okay. And at the same time, after the last payroll, you want to review all the discrepancies if there are any, and such as incomplete address, missing invalid taxpayer ID, including any data issues that you might have. So things like those that you want to be proactive to those to make sure that we have all the things covered from a wage deductions, earnings deductions, and all the way up to W-3 process. Okay. Ensure that your W-2 box 13 is properly updated, right, for the retirement employees. Simply said, you know how many times I've seen in my past that people will forget that simplest part and will have to run again the W-2 corrections, right? Okay. Terminated employees, if you need to purge them, please go ahead and do that. Employee names are specified correctly. Ensure that terminated employees have zero balances for loans, garnishments, and so clean up your system and the data as you go along doing these things. So that's what this checklist is basically going to tell you from end-to-end perspective as to how we make sure that our processes are verifying and reconciling all the data that we need to do, right? So Rachel, you want to take this one?
Sure. I would add to those things that there is those types of reviews for, say, terminated employees and name spellings and formatting of the data. Be mindful of that throughout the year in preparation for year end. Do a review at the end of each quarter or twice a year so that you don't leave all of the review and potential cleanup for the very last minute. That's my recommendation. So, so for deferred comp, before the last payroll, you want to verify that all of the data is configured correctly for your plans, that the plans are assigned to the right employees, and that the value limits are accurate. After the last payroll, validate that this disability insurance rates and wage limits are updated. So this might be a tax update or a system update that your IT team helps you work on and you test, or it could be something that has to be manually configured. So keep that in mind. Your GTL updates and other imputed income like gifts and awards, Christmas party, raffle drawings, all types of things, right? Review things that are a little more obvious to review, right? Those percentages on taxes that don't change much for most employees throughout the year. Also, review the third-party distribution. So you've got what IWOs, sick pay, if you have third-party sick pay, any other items dispersed by third parties. And I don't mind at this stage for myself doing a review of things like 401k loans, etc. What do you think, Neil?
The more you can validate and to make sure that your data is correct, you have a high percentage of the accurate W-2s. Okay. A lot of times I've seen the 401k wage limit, especially if a multiple FEINs and people transfer one to the other, and the system may or may not capture the limits, and you have to make sure that the people don't go over the limit, right? Or if there's a transfer to FEIN to FEIN, Social Security taxes, the system doesn't take care of that automatically, and that does happen. So regardless of whatever data, it doesn't matter what it is, if you can validate that and reconcile the accuracy of it, you have much better chances of the accurate W-2 at the end of the year.
Right. Agreed. And again, just to cover, right, those tax updates, the SUI rates and wage limits, again, they may be done by a SaaS vendor or by your IT team or by you manually. So validate those. And if it's outsourced, I would certainly validate that the vendor, get a literal acknowledgement that this data is updated. Let's see.
Okay, I think most of these items. What's that?
Did I cover all of those, Neil?
Yes, most of these items you have already covered, so we're not going to spend any more time because we've got a lot of more things to cover. Okay. But at the same time, like I said, we are giving you these handouts, and that will have all this information that you need at the end of the day to plan for year-end processing. So, okay. All right. This is all. Again, the checklist is very comprehensive to give you everything and anything that you need now. I'm not saying that's going to be 100% applied to your organization, but if there's anything that is missing that from your specific from an organization perspective, make sure that you cover that, okay? So from a checklist perspective, again, so this is kind of the cutover activities, right? Okay, that the multiple year-end payrolls that you have to run, remember, the paycheck date specifies when your tax liabilities are due, and you can't have a January 2nd pay date and the taxes due in the previous year, right? So all your special payroll have to be done by December, with the date of December 31, right? To calculate the liability. Now, you only get 2 or 3 days because of the holidays to deposit those taxes, and anything goes after that, it's kind of late penalties and interest start to accumulate. So let's make sure that if you have any supplemental and special processes that you not run before December 31 after the last payroll. If you can, at the end of the day, my advice will be that any special data, year-end data that needs to go into the system, you should be able to push that through the normal payrolls, right? But if that doesn't happen, you will have to schedule special payrolls, off-cycle payrolls. Make sure that those are properly scheduled. And if you're doing an in-house payroll, make sure your IT is aware of it, your HR is aware of it, that those are the things that you're doing and why you're doing them. And your vendors are also in the know that, hey, this is the time that they need to give you that information, whatever the year information might be. So it's kind of a very important part that don't forget to schedule these things and communicate at the end of the day to make sure that all the data that you need, okay, it's in the system. Now, obviously, you can run off cycles in January too for the previous year. But again, you know, how much of that you want to avoid or how much you can avoid is two different things. There are some times that you don't have time to do that, so you'll do it later. But to avoid any penalties or interest or anything else, as much as data that you can get into the system by December 31st, that's what is recommended.
I think also you want to avoid as much interference with the new year processing, right? You don't want to belabor your year-end processing so that it overshadows the year begin and you get off to a rocky start there.
All right, so now we have the third payroll question, okay? That if you could take 20 seconds to answer those, would appreciate that.
So this question is asking how engaged you are with your internal business partners in the year-end planning and execution process. So this is that 69% that have a plan.
Well, whether you have a plan or not, I mean, you know, you still have the engagements, right? From the
Right.
You can't do the year-end process without the engagement from those people. So,
and it tends to make, in my experience, a very big difference in the comfort level that each team and each individual within that team has about how the year-end process is going to go, right? If they know that there's communication, that folks are engaged and collaborating, they're much more likely to be comfortable with the pending results. So 46% very engaged. That's fantastic. 45 somewhat. Okay, that's a start. And 10% not at all. That's unfortunate. I would definitely dig into those. Start now. Start today for this year end.
remember guys, there's no right time or the wrong time when you get these people engaged, right? You know, if you start this year and they'll be a little bit late, that's okay. But it sets up the expectation as you go through the next year that, hey, these activities are going to happen. A lot of, depending upon the size of the company, people will start year-end processes sometime in late September, early October. Okay, so because sometimes it takes that long to get all the data and everything that you need to process your year.
Right. And I would say don't let each other off the hook either. Remind each other what you're responsible for, right? And different teams. So maybe the benefits team shouldn't assume that the payroll team understands all of the benefit plan updates or value limits or those types of things. So it's important to stay engaged because there might be changes that get missed if you don't.
Yeah. So what I have up on the screen is 2022 minimum wage updates. Now, we're not going to spend a time on this thing talking about what states are changing and why are they changing and how much they're going to change to. This is kind of give you the idea, if you look at the far right column, that how many states are changing their minimum wage comes next year. And when I pulled this data, it was truly not even final at that point. So things may have changed. So make sure that you're watching out for any periodicals or any compliance periodicals that you have to keep a watch out for all the minimum wage change for the 2023. So there's a lot of states that are changing. But the message that I want to get to you is the 2 points there, right? If the minimum wage is changing, what does that mean to your system and the processes? Okay? Remember, this is a January 1st change. So you got to have the new compensation in the system for the first payroll of the year, right? Okay. So you want to make sure that you run an audit from the systems. Start running those audits in October, November for the current year rates that you have. So this way, you know how many people will fall below the minimum wage. Now, does that kind of belong in HR and compensation? Yes, okay. But at the same time, you need to partner with them to make sure that you give them the new rates, what they will be. So you need to give the new rates to the IT people to make sure that they can update the systems, and the compensation in terms of the communications. What communications need to go out to the employees where compensation is impacted by the minimum wage change? Okay, very, very important. And not only take a look at that, it's just not the minimum wage change, right? If you have to the configuration to the shift differentials or any other activities that happen during after that, make sure that those are covered. From a finance perspective, has this been rolled into the budgets? If not, do the budgets needs to be adjusted? Okay, so all those the points is that yes, minimum wages change is there, but it's just not putting the wage change into the system and saying we're done. There's a lot more activities. You don't want to surprise the employees, because remember in payroll world, if people get overpaid, they don't call you. They only call you when they're underpaid, right? So it's not an overpayment, it's the right payment. So make sure you communicate that way so that there is no confusion from the employee's perspective, okay? So that's the only message on the minimum wage change. Similar to that is your unemployment rate change. Okay, so what we're giving is in your unemployment a couple of things that we're providing you. We're actually, in the last couple of years with the pandemic, a lot of organizations with the remote work, they were starting to register themselves in the different states, and they had no idea what the new employer rate will be for any organization in a particular state. So in this worksheet, we're actually giving you state by state what the new employer initial rates are out there, okay? The changes to unemployment wage base effective January 1. So we're providing you those changes, and those are highlighted in there. So your responsibility is basically to make sure that your effective tax rate, which is the organizational specific, they are changing, okay? Which generally they do change at the beginning of the first quarter of the year, is to make sure those are updated. Not only those are updated, your wage bases are updated. If the wage bases are updated, do you need to have any impact on the accruals that you might have? Okay, so all those things are basically very important to follow through from an unemployment wage base perspective, okay? And so here's the list. Okay, so the ones they're highlighted in highlight blue, those are the changes. And you have a state, they have a new employer tax rate. You have a tax rate range. So most of these states have a rate for every organization that this is a range they're going to. So if you look at Alabama, right? Employers could fall into 0.65% or to all the way up to 6.8% is the maximum, right? So you'll be somewhere in the middle depending upon your experience rate, termination, turnover rates, and all those things. But for Alabama, the wage base is the same, whereas the Alaska is changing from 45,000 to 200 to 46,800. So in this worksheet, we're giving you all that, okay? All the changes that are happening in 2023, where it says varies. In those states, we're giving you the aggregate rates, but it depends upon the type of industry you are. So that's kind of a little bit different for those states where it says it varies, okay? But at the end of the day, you have all the information at your fingertips now to set up your systems and to make sure you can validate. But before you even take these rates, make sure that these have not changed, because these were pulled a little while ago, and I'm not sure, I don't think much of them have changed, but there might be some new ones that they might have come up that they're not highlighted here, okay? So just keep that in mind.
Also keep in mind that it is possible, I mean, there are circumstances when states will adjust rates times other than the first of the year. So watch for those notifications from the state and get them updated as quickly as you can once they come in.
Okay. Thanks, Rachel. All right, from a technology consideration perspective, we kind of split it up in two. The tasks really don't change much, whether you're hosted applications or your vendor hosted application. The only thing really changes is who's applying the changes to the system, okay? If a hosted application, then your IT and yourself are making those changes to the system. If it's vendor hosted, then the vendor is applying those. But from that perspective, not much really changes from a responsibility perspective. You still need to validate the results, validate the configuration. You need to validate the changes. You need to test those changes to make sure that if you made a change to A and it did not impact B, okay? It takes a long time to do that testing, and depending upon your organization and the changes there in the year end, how many processes you want to test, and what do you want to test, and what the expected results are. So you can make those changes prior to putting them into production before the first payroll of the year, right? So obviously these changes happen in the test systems. If you have limitations, development tests and all those things, you might be doing all in one system. But let's make sure that all those changes are applied timely and accurately, so that your first year payroll, while you're working on the year end and the previous year payroll, you cannot ignore the first payroll of the year, right?
Yeah.
So that's the basic message here, is to make sure that you cover all those things from a testing perspective and a configuration perspective.
This is where I like to apply that saying, trust but verify.
All right. Okay, so now we've got about 17 minutes left, and I bet you we're going to end up spending the whole 17 minutes, or close to 17 minutes, in this aftermath of COVID-19 and CARES Act. And I have a lot of notes. I couldn't remember everything that I wanted to talk about. So we'll talk about point by point, bullet by bullet, as to what those things are, what they mean. Okay. So the very first one, IRS releases Form 943 Schedule R draft. Okay. So basically, the Schedule R is for the agricultural employees. Okay, where they've changed this 943. Okay, to cover a couple of different things because of the pandemic. Okay, the idea here is that, remember, all those changes that they happened within the pandemic, okay, were not very well tested, not very well communicated. Now there's a little bit of a cleanup time. So make sure that if there are any agricultural employees, make sure you take a look at the Schedule R to make sure that what the changes are. Okay. Student loan garnishments on hold until 2023, and some debts canceled August 24, 2022. It's a big topic now, especially now with the Biden forgiveness of the loans, student loan forgiveness. But from a garnishments perspective, any loan garnishments are still on hold until 2023. Okay, they have not come up with a extension of that I have seen. If somebody else knows, please let us know. But they're still on hold, and at the same time, these debts are being canceled, and those are up in the air as to what happens to those. Even though the Biden's guidance was to forgive to certain amount of loans, and that is being hung up in the 6 different states now, because those states who manage and control the federal loan itself, those states control, they have gone to the Supreme Court and appealing that. What is happening is that the right thing from it? Everything has come down to states are losing revenues, so they will fight anything and everything to make sure that their revenues are not jeopardized at the end of the day, right? But from a garnishments perspective, they're on hold until 2023. Companies must maintain work location of employees, taxing remote and hybrid workers accordingly. 183-day rule is not always applicable. Okay. Now, there's been a myth in the executive world, not in the payroll world, I would say, is that if you don't work in a particular location for 183 days, we don't have to tax you for that jurisdiction. That is a myth, guys. Okay, that's not a reality. There are a lot of jurisdiction within the US and outside of US, they will start to tax you from the day one that you start to work. Now, business meetings don't matter. You're there for a week or 2 weeks, but actually, if you're doing the physical work from those locations, right? Talk about internationally, California comes to mind. Are you physically present in California? You pay taxes from international perspective. Canada, Trinidad. So there's a lot of examples like that. The 183 rule doesn't employ, right? From a work, there's a one simple rule that the IRS says: employer is responsible to know where the employees are and tax them accordingly. Keep that in mind. It's not up to the employee to pick up and move anywhere just because they're working remote. You have to know, you have to set up that organization in that state if you're not registered. And the next point goes along with that. Remote work is complicated. It's because of the taxation issues. The payroll world has become very complicated. Okay. Hybrids, how do you create the hybrids? Hybrids are okay if you work within the state 3 days from office and 2 days from home, that's fine. But if you end up working 2 days from home in a different state, you need to think about that. How do I tax that employee for those 2 days? Okay, so those good old days of ignoring those things are gone. State and the IRS are looking into it very seriously, and they will be eventually, when they get some time and wake up, they will audit the people depending upon how much care credits and all the things people have taken. Okay, all right. The next one, DHS has proposing to extend flexibility to employment verification. So basically, that's the if you think about it, in the pandemic time, when you were hiring new employees, they had made I-9 that can be verified virtually, okay? But you didn't have to be present in the office to get that verified and signed off. So that has been extended, and I believe that it'll become permanent, where employees don't have to be in the office to get the I-9 verification done, okay? Effect of COVID has a pay on overtime calculations, right? So a lot of times, especially in the health industry and few other places, people were given the COVID pay increases or COVID pay adjustments, and at the same time they were doing the overtime, but they may or may not have been included in the overtime calculations. So now there's a look back going on for all these organizations as to if they followed those and included those into the overtime calculation. So if you haven't done that, or if you have a reason to go back, please make sure that you talk to the qualified people who can help you. That how do we, is that COVID pay, was that related, does that get into the calculation of the overtime calculations?
The regular rate.
To the regular rate, right? So let's make sure that you're covered from a compliance perspective. Now, obviously, you know, there's always going to be time. Did I do it at the right time, at the wrong time? Guys, there's never a wrong time, okay? You don't want the IRS and the states to walk in there, do the audit. That's much more damage than to be voluntarily doing those things to make sure that your employees are paid properly and you have satisfied the tax liabilities and all these things, okay? Workplace dynamics with office closure due to government mandates versus employer convenience. So during the pandemic, there's a lot of offices or the organization were told that they had to close the office, that they had no choice. And in that scenario, the rules were a little bit different because the government is mandating you closing those offices. So the taxation could have been treated differently. Okay, or the remote employee or the hybrid employee taxation, there was a lot of leeway given from the states that says, okay, it's fine. If you're working in my state for, you know, due to the government mandate, I'm not going to hold you responsible to pay the taxes for this state. Versus now, that if you're telling people to work remote, that's the employer convenience, that we are letting people work remotely. It's not a government mandate. Now you have to start follow those taxation rules, not from a state perspective, and also from a resident perspective. Okay, you can use a PO box. You know, actually the question came up the other day to me. Can I just use a PO box? The answer is no. Right? The government rule says very simple. You are supposed to track your employees. And a lot of big organizations, Googles and Intels of the world, they're actually doing that through their logins, which IP address they log in, where do they check in. So all that is happening to get set and get ready to make sure that we are covered from a compliance perspective. Okay. IRS releases revised Form 941 instruction for Puerto Rico to take into account the expired COBRA premium assistance. So during the pandemic, again, there was a lot of COBRA premium assistance that was given to the employers because employers were paying the COBRA premiums for those health and Medicare medical plans. Okay, so that since the pandemic is kind of over, they have now revised the 941 to take that section out for Puerto Rico completely because there's no longer any more COBRA premium assistance given at this point. Okay, there's a draft version of 943, 944.22 were released on June 28 by the IRS. Forms no longer include line pertaining to employee retention credits. Okay, so these were the retention credits that they were given during the pandemic that instead of laying off people or firing people during the pandemic, if the employer were able to hold on to these employees, they were given the credits almost equal to the wages paid to these employees in their taxes. Okay, so that's also gone. There's no more retention credit left. A finalized version of revised 941 instruction issued by the IRS, updated to reflect the end of COMRA period. So again, that's on the US side. Again, which generally, so that generally expires on 9/30/2021 and had limited availability for the first quarter of 2022. Okay, so that all has been adjusted into the 941 today. Okay, last but not the least, guys, the wage changes. One of the biggest change, if you go back to the history of Social Security, from $147,000 to $160,200. That's about a $13,000 increase in the employee wage base. If you multiply that by 6.2%, comes to $750,000, $800. That's the increase in the employee tax liability for the high earners, and it's an increase for the corporation from high earners employer portion of it. Depending upon how many high earners you have, you may need to adjust your accruals or whatever the finances that you need to do that. At the same time, you have the 401k changes, $2,000 increase in the 401k contribution, and $1,000 increase in the for the catch-up contribution. Those are finalized numbers. They actually started the 401k about a month ago. It was sitting at the Social Security about a month ago was sitting at an estimate of $155,000 wage base. Now they're finalized it to $160,000. So just an FYI, keep that in mind. Make your systems are updated to these wages if you're doing internal changes to the systems, okay? And make sure that your financial side of it is taken care of. Wow, I did that in the less than 18 minutes. So, okay. Sorry, I had to talk a little fast. That I wanted to kind of, cover all these points. Now, keep in mind, guys, this is not all the list of all the changes. Okay, there's a lot more than this. There is a unemployment calculation, how it is done. There's a whole change from a federal unemployment and state unemployment wage change perspective, how those calculations are done at the back end. I didn't want to bore you with those kind of calculations, but wanted to give you the most of the stuff that may impact you from a day-to-day payroll perspective. So you're aware of it and you can check into that. So if a particular item applies to you, reach out to us if you need more information. How we can help you, we'll be glad to do that. And provide you with assistance in terms of any audits or anything that you need to do those processes. Okay, so let's open it up to Q&As. Rachel.
So we don't have a whole lot yet. There is a question that asks, what are the 457 contribution limits for 2023? Do we have the 457s?
I'll send that in the communications out. Okay.
Okay. Yep. So we'll send that as a follow-up.
Yep.
One of the other things I wanted to mention is that it's important to keep in mind in regards to the minimum wage changes and things like that, how those types of changes might impact other programs or configurations that you have running, or even integrations with other systems. So for example, if you are running, say monthly, you're doing a regular rate of pay review, and you want to think about how any of those changes impact the formulas or the data that's used in those calculations. We don't have any other questions yet. Neil, was there any other item that you wanted to touch on?
No, I'm good with that. I mean, we're almost kind of out of the time too. If you guys need to reach out to Rachel or myself, obviously my email address, Rachel's email address, and our LinkedIn, that if you want to connect us through the LinkedIn, you're welcome to do that. And our LinkedIn profiles link is right there on the screen also. So it will be in the handout that is that is in the handout section. So please go ahead and do that. Not an issue at all. As a reminder, I just want to tell you that as soon as I stop talking, you'll have a pop-up for this little bit of a small, very small survey. See if you can complete that quickly. And we'll follow up with the, like I said, there's not too many questions. Sometimes it takes a while for people to ask questions. That's okay. It takes a little while to warm up. So if you have any questions, just send us the questions directly, either to email or any other way that you think that you can. Not a problem. We'll get you the answers. And as I also mentioned earlier during the presentation, that this session is being recorded. So you will all be given a link to the recording of this session. If you want to share that with your colleagues or keep that for your future references, you're welcome to do that. And I really, really appreciate, I'm glad that we have such a big presence today. Really glad to know that the payroll folks care, which is, I can tell you the stories, why do I care about payroll at the end of the day? But I don't think we have all day today to do that. But I think at the end of the day, all payroll professionals who come to work in payroll care for the employees. And we want to make sure.
You have to have a passion for it, right?
You have to have a passion, right? If it's written payroll on your forehead, then we know who you are. So again, thank you all for your contributions,
yes.
And really appreciate taking care of the working America.
Yes, and thanks so much again for joining us today. We really appreciate it. We look forward to working with you all. And no other questions, so okay. I think for now we'll.
Yeah, we're at 12 o'clock anyway, so we're good. Our time is up. So.